Hi there, welcome to my channel. So I've been selling options. Currently I'm selling cash secured puts because, well, I have cash. And so as you guys can see up here, my total cash currently is above $250,000. And so I'm able to sell cash secured puts on the NASDAQ or QQQ. I'm able to do 3 contracts currently. And just like yesterday, I was able to make money. So yesterday I made $480, and today I was able to make $460 for the day on the NASDAQ. So let me show you guys. Let's look up the NASDAQ. Currently one of my favorite ETFs, the NASDAQ. And so if we scroll down pretty much to the bottom, we'll be able to see the 2 cash secured puts that I sold today. So if we open this up, and as you guys can see, there is one that is here. And so this one I sold for $237. So originally I did sell it for $1.28, which was a total credit of $384. But then I saw it in profits, $237, so I decided to buy it back to close and keep the $237 for the day. So I did that with this one. And then I did another one. I don't know if it's down here somewhere. Yeah, this one here. As a matter of fact, this was the one that I did very early in the morning. I did 3 contracts for $1.20, but this one was very close to getting into the area where it would be where the cash collateral would be called away from me. So I decided to get out of this for a small profit. It's right here. And so on this one, I only made $30. Originally, if I would have just held on to it, I guess, till the end of the day, I would have made $360. But I decided to just take the money, $30, because it somewhat looked like things were going to go against me. And since it's Friday and the weekend is coming up, I did want to keep all of my cash. So I decided to sell this off for $30 immediately in the morning. This was the first cash secured put that I sold this morning. Soon after doing that one, I did the one I showed you guys, which was this one, the $237 of profit. And then I did one more towards the end of the trading day. But, well, it wasn't really the absolute end of the trading day, but I did this one. And we'll go to total profits. So I did this one for 81 cents. And I was credited $243. But as soon as I saw it starting to go into the money, I decided to take the money, $117. So basically I just paid them back $126. Basically I just paid them back almost half of their money, which was fine by me because I did make $117. And so I was thinking of doing another one. This was around, I don't know, sometime before 9 o'clock this morning. So I did those 3, and then I was just waiting and waiting to see if there was another opportunity to sell another cash secured put. But since I kind of set this goal of at least making $300 per day, and I had already made $460 for the day so far, I decided not to risk it. Because it was just kind of up here in this area. And I believe the last covered call that I sold was up here. Or the last cash secured put, sorry. The last cash secured put that I sold was up here. So what ends up happening is that I try to buy them when it's in the red. So I did buy it in this area here because when the market is going down, cash secured puts tend to become more valuable. As the market rises, they begin to lose value. And so as they lose value, if you already sold a cash secured put down here in this area, for example, or down here, which is what I did in the morning, I sold one here and then bought it back somewhere in this area. And then I sold another one here and bought it back up here in this area. And so I pocketed the difference on those two cash secured puts. And so you just collect the difference. You know, you give them back a little bit of their money, but you get to keep the difference. And so since my goal is to try to make at least $300 per day, and $460 is of course above the $300 goal that I have per day, the market was over here on this side. And pretty much for the rest of the market, I did nothing because I had already made $460. I could have potentially made a little bit more. But once you get to closer to the end of the day, cash secured puts on that expire on the same day don't have much value left in them because, you know, the day has already passed. And if they expire on the same day and the market is about to close, those premiums for the cash secured puts are not really that valuable. The time where they're most valuable is at the market open. And currently where I live, the market opens at 6:30 in the morning. So at 6:30 in the morning is when premiums are very high, especially if the market is low. If the market is in the red, then you can, you can always look for a premium that you want to get, a certain price you want to get. You'll find the price that you want. But of course, the premiums that are the absolute highest are the ones that are closest to the actual price of the NASDAQ. Those are always the more valuable premiums. So if we look at the trading options here, let me just show you guys what I'm talking about here. We're going to go to a cash secured put. And as you guys can see here, the current price of the NASDAQ is $723.23. So the one that is most valuable is the 723 strike price. As you guys can see, it's $3.31. But the likelihood of actually making those profits, you have a 65.86% chance of actually making the $3.31. So what I'm trying to do is I'm trying to make at least $300 a day, and I'm trying to keep it at least at $1.50. So personally, I would go for something like this at the 718 strike price, because that one says that I have a 77.55% chance of profits. And $101.50 would be like about 400 and some odd dollars. If we open it up, let's take a look here. This is at the 718 strike price, which is pretty much a few dollars away from it's about $6 away, I think, from the current price of the NASDAQ. And so if I was to sell this one, for example, on Monday, 3 contracts, that would be $450. And so in the morning, at 6:30 in the morning, is when these cash secured puts have more value. And so towards the end of the market day, they tend to lose more value because there's less time. There's less time to sell them, and they'll be closing sooner. So it's far better to do this early in the morning so that you can get as much premium as possible. And of course, I don't want my collateral called away from me, so that's why I don't do this one. Although the premium is very high, if we take a look at this, the premium for this strike price, it's at 723, and the actual price of the NASDAQ is 723 and 23 cents. So it's very close. So if you do 3 contracts, that would be almost $1,000 for one day. But this is too close to the actual price. So this is more than likely that that your collateral will be called away from you, or your collateral will be called away from you, and you will own 300 shares, or I would own 300 shares, and didn't want to own 300 shares. So I'm just kind of trying to choose a strike price and a credit, a premium that is no less than $1, but not higher than $1.50. Now, I mean, I could go for this one. This is $1.78, which also wouldn't be bad. I'd make a little bit more in premium. 3 contracts would be $534, which isn't bad, for the day. Which isn't bad just for like pushing some buttons here on my phone. And so on Monday, don't know what the prices are going to be. Currently, the NASDAQ did go back up to its, I think, daily high. This was the peak of the day, just before 6 in the morning. And it's pretty much almost back right there at that price. So we'll see what happens tomorrow. I mean, well, not tomorrow because the market's not open tomorrow, but we'll see what happens on Monday. On Monday, who knows? This could be headed down, or it could be headed up. I don't know what direction it's going to go. But I'm going to try to sell, of course, a cash secured put for Monday, and hopefully I can make another $300 to $400 by selling cash secured puts. Of course, if for some reason my cash collateral is taken away from me, and I do happen to have to own 300 shares of the NASDAQ, that's no problem. I don't mind owning 300 shares of the NASDAQ, because if I'm obligated to own 300 shares of the NASDAQ, well, then I'll just start selling covered calls. And so if we look at the premiums on covered calls right now, say I did own 300 shares, I could do 3 contracts. And if I was to own it, I don't know at what strike price. I was looking at the 718, which is here. So as you can see, I would obviously not sell a 718 strike price. I would probably sell somewhere up here, maybe this one, the 726 strike price, using kind of that same idea of trying to at least generate $300 per day on the minimum, anywhere from $300 to $400 per day. So I would probably go with the 727, which is this one here. And this would be a premium of $426, which isn't bad at all. And it's not very likely to be called away because the price is quite a bit higher than the current share price. So yeah, that's what I'm doing, and so I'm trying to average anywhere from $400 to $300, no less than $300. I would like to at least make $300 every single day if that's possible. So thanks for watching. Please don't forget to like, share, and subscribe. I really would appreciate it. You guys have a good one. Have a good weekend. God bless. We will catch you in the next video. Bye.